Well, hello and welcome to the day ahead. It is Monday, the 16th of January. I'm Nadine Blaney. Well, global stocks rose for a sixth straight session on Friday. The MSCI index hitting a one-month high, its longest rally in slightly more than 2 years. On Wall Street, U.S. stocks closed higher in the wake of earnings reports from several large banks. J.P. Morgan Chase, Wells Fargo, Bank of America, and Citigroup were all higher. Now, both the S&P 500 and the NASDAQ closed at their highest levels in a month, while the Dow closed at its highest point since early December. Over the week, the vast majority of sectors climbed. Consumer discretionary stocks surged, defensive plays, healthcare, and consumer staples lost ground. Amazon.com rebounded even as analysts eye the slowest revenue growth since 2001. Over the 5 trading days, shares were up 14%. Chip makers gained amidst the broader market rally over the week. Inflation was up on cooling inflation. Energy was up on cooling inflation and demand hopes, with oil nearing $90 a barrel. American Airlines soared after raising its profit forecast, but Lockheed Martin dropped as analysts warn of a potential U.S. defense budget cut. United Health fell even after a fourth quarter that beat expectations. Shares closing Friday in the red. Now, on U.S. earnings, they do continue this week. A bit of an update coming in just a bit. Worthwhile mentioning crypto markets. They surged over the weekend, with total market cap now sitting just under $1 trillion. Bitcoin led the charge amongst the majors, skyrocketing to hover around the 21,000 territory, while all the major alts rallied into the double digits. However, not all are optimistic that this big upside move is sustainable, with some suspecting they could signify a bull trap, pointing out that nothing has changed in the underlying fundamentals of crypto markets. Well, helping U.S. stocks along on Friday was data showing consumers see inflation easing over the next 12 months. The University of Michigan survey of consumers followed the CPI reading on Thursday, of course, which also showed consumer prices fell slightly in December. The dollar index was flat, the euro down as well, the Japanese yen, though, strengthening against the greenback, while sterling was up after a stronger than expected UK GDP read. The greenback has weakened to its lowest level against the yen since late May on speculation the Bank of Japan may revise or possibly even abandon its yield curve control policy as early as this week. The BOJ subsequently announced 2 separate rounds of emergency buying to pull the yield back down, one of which happens today. We also get Japanese producer price index today. Looking at the week ahead locally, and on Thursday we get jobs data. The expectation is for a strong jobs report. Unemployment predicted to remain steady at 3.4%. NAB is forecasting a 25 basis point hike from the RBA in February and March if jobs come in around expected. Today we get the December Melbourne Institute inflation gauge. On Tuesday, the Westpac Melbourne Institute consumer sentiment read. And also on Tuesday, we get the Chinese December retail and industrial sales. On Wednesday, we get CPI for Europe and the UK. Thursday, U.S. building permits and job starts. And on Friday, European consumer confidence. Back to U.S. earnings, and markets today are closed for Martin Luther King Jr. Day. But on Tuesday, we get final quarter earnings from Morgan Stanley and Goldman Sachs, plus Interactive Brokers and United Airlines. Thursday, we get Procter & Gamble and Netflix. Well, today locally on the corporate front, pretty quiet. We've got CropLogic releasing its FY earnings. We've got Sonmoned also releasing earnings for the half year. And Neo Metals holds an investor meeting. We are expecting to see a lift upon the open here. SPY futures up almost 0.5%. Copper will be in focus after gaining nearly 7% last week. Investors are betting on that revival in Chinese demand. Cooling inflation also helped push gold prices higher, so we will be watching the gold sector as well. Well, that does it for the day ahead. I'm Nadine Blaney. We'll see you tomorrow.